Stock market volatility has been increasing as of late, and this is because of many factors. I will get into some of the indicators today showing you exactly why the stock market has already begun a collapse. This has been sustained by the central banks around the world and their policies. Let's get into it right away. I want to show you one of the biggest issues that I like to bring up. This is major US financial institutions leverage ratios. You're looking at all these different colors here, but the blue color on the very right, that's the Federal Reserve showing you Q3 2014. They are far greater than all of these institutions, and you're talking about institutions that are huge. JP Morgan, for example, having even trillions more in derivatives than the GDP of the entire world. Something that's so unbelievably drastic. And then the Federal Reserve in this instance has a higher leverage ratio than all of those other ones. This is something that is so insane, so crazy, but yet they continue to do these policies. QE1, they said that would be all they ever needed. Of course, that wasn't the case. QE2, this is all we ever needed. Now QE3, and they're saying that that's it, that's all they're ever going to need. Well, the fact remains is that they need more and more stimulus. Let's get into the real stuff right here. MSCI World Stocks. You can see between QE2 and QE3, there was no growth essentially, and in other cases you had the growth actually on a decline. So then we look at when QE3 begins, and it's practically a straight line upward. Of course, that corresponds directly with the Federal Reserve's balance sheet, something I talk about often. And then you can see now it's starting to taper off in the growth. And why is that? Because the Fed has supposedly been tapering off, at least in the rhetoric, has been tapering off in their own money printing. So we can expect to see that if they actually do pull out of QE3, that we're going to expect to see another decline happening or another stagnation. But ultimately, we are not going to see growth because the Federal Reserve has generated that false growth. This is all a fictional tale. Let's get into this right away. I want to talk to you about why the markets are broken. You can see this, all liquidity gone. Pointing at that right here, you can see on the top chart how in an instant things can change. One trader can make that difference. High frequency trading is something that has been breaking all of these systems. Let's get into this right away. I want to talk to you about the Nasdaq, the market system status. They have changed this page right now, but previously it was talking about how the market, just for a period of time, they lost control, nothing to worry about. Some of their servers were down, but everything is just fine now. They can lock you out of your stocks. You cannot then trade. You cannot get your money out. You cannot issue sell orders or anything like this. This is what I fear about the paper markets. This isn't just here in the US and Canada. The UK is all over the world. New Zealand stock market resumes after second halt in June. This makes a big problem. It isn't just something that happens for a second, it's a little glitch and everything continues on. This is something that's really scary, especially when you have these high frequency traders who are making up most of the market. And then you have the central banks. All financial institutions are getting in on this, and it's obviously going to be a big problem. Australia also faced a similar problem where they had a glitch in their system and people couldn't trade. Huge deal. Let's get into what the IMF said. Again, I bring in the information right from their websites directly. Oftentimes others don't do that, which I think more should be doing that practice. However, let's get into it. Data limitations prevent a comprehensive assessment, but shadow banking in the United States seems to pose a greater risk to the domestic financial stability than shadow banking in the Euro area and the United Kingdom. Well, why isn't the IMF talking about the shadow banking as a whole? Why do we even have shadow banking? Why can't there be more transparency so that individuals would feel more comfortable investing? But of course, that's not going to happen. The IMF, an institution that has, they're not even voted in, and they get their policies dictated within every country they go around, and they dictate these policies that are obviously meant to put a stranglehold around the economy. That's what I want to talk about, the shadow banking, the things that are going on behind the scenes that the individuals at the end of the day are going to be facing, because it's your job that's going to be on the line when a stock market collapses because of high frequency trading, because of the shadow banking that's going on. This is a CNBC transcript of the Bank of England Governor Mark Carney. Let's look at what he says. As some economies emerge from a period of exceptional, unconventional stimulus, there will be greater volatility. And then he goes on to say, not to worry, everything is fine, we're going to handle it, we always do, but we know that that is absolutely not the case. I want to point out the fact that he said unconventional stimulus, and that is absolutely correct. When you have trillions upon trillions being printed and sent into the system, and it's being hanging around at the banks for them to then use that money and buy up stocks of the S&P and to prop everything up to make it look like everything is just fine, but the reality of the situation is anything but that. This is my biggest fear. This is what I worry about every single day when I bring the information to you. I may not mention it, but I know that I have mentioned this hundreds of times. This article out of Bloomberg, Italy, on sale to the Chinese investors as recession bites. This is a huge concern of mine. We saw it in Greece where they were selling off assets of the nation. This will take place all around the world as poverty increases, as the austerity increases. You have individuals and, of course, cities, states, and so on becoming more and more bankrupt. And what do? They put their hands, give it out to the bankers and basically say, look, we need your help. Help us. And what's happening right now is exactly this. Individuals, rich individuals who are benefiting from the regulations, from these so-called government structure that we have, which is nothing but criminality, they are benefiting from this, and they're then able to buy up the shares of the stock market. They're able to buy up the real assets. They're doing this, and they're very successful at this. This is going to happen all around the world, where all nations are going to be victim to the technocrats. I wrote about it in my book right here, quoting, typically giant corporate banking and private interests stood behind the IMF measures and imposed privatization of state enterprises. And then I said the IMF's programs loot the countries, only making matters worse. But it's not just the IMF that is going about this. This is nations basically selling off all of their private assets and all of their state assets and selling them off to private hands, to foreigners, and it's going to be a huge disaster for the future. You're going to have the Colosseum sent off, and the CN Tower, and all these iconic buildings are just going to be sold off to foreign companies, and this is going to happen where you have even land being sold off, and it's going to be a bigger and bigger problem as time goes on. If you found this video informative, please give me a thumbs up. As I said in the last video, bear with me while the website, themoneygps.com, is under construction. If you want to be an insider, it's where I give out all my best intel for free, and that is available at themoneygps.com. Scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.